You'd have,
No.
you could have a partner, you could do it yourself. You're
Yeah.
getting all of that depreciation essentially for yourself. You're not having to give part of it away to investors, and it
Yes.
can really help you mitigate any other tax liabilities that you have. Say, just for example, in your case, from like maybe selling out of some of the larger properties you were in and getting into these, smaller residential assisted living houses where you're getting all of the depreciation on your tax return.
For sure. And also because there's so much furniture, so much equipment and other stuff, and commercial also, and more utensils. I mean, you name it. Even the fixed property, also, you have to put money into renovations. So, how does that go about bonus depreciation and cost segregation? Could you throw light on that?
Yeah, I mean that it's almost like when it's similar in structure um having like a short-term rental perhaps, right? Where
Yeah. Yeah.
you're buying all of the furniture and the like you said, all like the kitchen utensils and
Yeah.
supplies and plates and
Hmm.
pots and whatever else you put in there. It's like
Yeah.
everything that goes in there, most of that stuff is going to be 5-year assets. All the and
Yep.
the furniture will be 7 years, but it's still
Yeah.
subject to bonus depreciation, right? So
Hmm.
think about if you were to buy a house that you could do this with for say $500,000, not only would
Hmm.
you be able to cost segregate the component pieces of that property, out.
Hmm.
There's got to be some tangible personal property and some land improvements in a house
Yep.
like that, but also then adding the furniture,
Yeah.
and fixtures and supplies and appliances and um, plates and whatever, all the other things that you need in the
Yep.
house, right, to make it
Hmm.
run. So all of those things would be added um, bonus depreciation, right? So you can really get a
Yes.
really nice first year hit,
Hmm.
and you get the ongoing remainder of the depreciation for
Yes,
the next 5 to 7 years,
for
because like
sure.
in 2024 you're only able to take the 60% bonus depreciation, so you still have the 40% of the cost basis to then allocate over 5 or 7 years. So you end up with a very nice kind of stream of depreciation deductions.